Hello, everybody, and welcome back to the newest episode of the Getting Real podcast. I'm your host, Matt Harms, founder, broker, owner of the Time Away Real Estate Group, and author of the upcoming book, Get Real, Building Knowledge and Wealth Through Real Estate. Today, I have the pleasure of being joined by fellow author and prolific real estate investor, Tony Lopes. How are you today, Tony?
Matt, I'm great. Thank you so much for having me on.
It is my pleasure. Real estate and writing, I can't think of a better way to kind of merge both of my worlds than have you on the show.
Yeah, for your listeners, Matt and I met probably, I don't know, a little over a year ago, maybe.
Almost,
And
actually, it's only February, believe it or not, but it
oh,
feels
really?
like a year.
Wow. Yeah, time flies. And yeah, wow, a lot's happened since February. So yeah, it feels more like a year. But we Matt and I had an amazing conversation. And I love what you do, Matt, in terms of helping people publish their book, their story. Because I think each and every one of us has a story to share, and there's value in that storytelling, right? Storytelling has been a part of culture ever since the caveman, right? So everybody has a story to share. And prior to recording this, hitting the record button, Matt and I were having a great conversation about value. Each and every one of us having to create value for ourselves, for society, for our family, whatever it may be. And so if you think you don't have a story to share, if you think you don't have value to offer folks in a book, in some sort of, even a short story book, something like that, you got to sit down and really think about what you're doing or what you have been doing and whether it's the right path. Because creating value is super important and probably going to get even more important as we roll into the future. Matt, we haven't even spoken about AI, artificial intelligence. We can, but AI is becoming more and more popular, and it really starts to make all of us question the value that we bring to the table as humans, as opposed to something that's artificially generated through AI, right? Articles can be written by AI. Even now, some of the software engineering type coding can be done by AI. So whether you're, a marketing person, or whether you're an engineer, or whether you're a contracts lawyer, I think we all have to reassess what we're doing as far as value, work, and what sort of stories we can tell to the next generation, to our sons, to our daughters, to our family, to our friends, in terms of helping them be more successful, enjoy life more, right? Enjoy the ride more. So yeah, there's a question of value as we begin to write. You've written books, I've written books. There's an immense question of what value can I share to someone? And if you are struggling with the value you bring, I, I think you got to analyze that and say, what can I do different?
I love that you brought that back to that conversation because a lot of people tend, at least from my experience, either tend to think they don't have any value, they don't bring any value, or they misrepresent what value really means because we live in such a capitalistic society. And not that there's anything wrong with money. We all do what we do for money. Money
Yeah.
allows us to hopefully do good things.
Yeah.
But value also comes in the form of knowledge. Like, what are you doing for, as you mentioned, everyone else around you?
Yeah.
What you have in your head is value. AI adds value, but AI doesn't achieve anything on its own.
Right.
AI can add value to you and what you do so that you can now exponentially help more people.
Yeah, absolutely. And so, I share a great story with, or perspective, I guess. You and I were talking about, I can pontificate about a lot of different things, but I have the, so to speak, the value of free time, and I'm not really tied to anything or anyone. So I have that value of I can let my mind go wherever I want to, right? Let it wander. And so when I let my mind wander with AI, there's a couple of things that come to mind. And so this is, so to speak, the value that I'm going to share. Just on AI. The first thing is, if you have a young person in your life, a son, a daughter, a niece, nephew, friend, whatever, neighbor, I think one of the most important questions going to school today, going to college, paying for college, whether it's associates or PhD, whatever it is, I think we all need to be facing into this AI scenario and saying, am I going to be getting an education that's truly going to benefit me? Or am I going to be getting an education that's going to be replaced by AI? Right? Marketing, for example. If you're going to school for marketing, a lot of that, not all of it, but a lot of that is being replaced by AI. It just is. And AI is going to get more intelligent, more sophisticated, better, more human-like. It just will. So marketing is an area where I think folks going to school for that need to be careful. I'll also throw out there contract law. Contract law is pretty much, boilerplate. So if you're looking to go to school to be a contract lawyer, you might want to kind of spend some time thinking about that and do some research around how AI is changing contract law. I already mentioned software engineers, right? Again, a lot of that code can be boilerplate. I know there's some amount of, having done code myself, there is some amount of personality that you have to bring to it, and some syntax. I get that. But what I'm sharing is some of this work, I don't know how much, 50%, 80% can be done by AI. And the last 10, 20, 30% will be done by a human being. So it's no longer 100% by a human being. It's only 10, 20, 30% that could be done by a human being. So I think, again, young people going to school, paying for an education, you really gotta look at where AI is going. The second piece I want to share, again, for young people, you have a staff, Matt, I have a staff. I look at, different things. One of the biggest areas that I look at are adding people to my staff that can help me in an exponential way. And so folks that I bring on that have a huge following is very important to me, because I'm trying to get my message out. You're trying to get your message out to a lot of people so that we can help a lot of different people. So for young people out there who are watching this, or parents or uncles, aunts, whatever, family members, even neighbors, if you know a young person, encourage them to grow their following. Having a huge following is super important. I'll give you an example. My niece, she's in journalism. And so she has maybe a following of 5,000 people. And okay, so that's a start. She's young. She's 24 years old, just got out of college. But I share with her, in terms of going to work at the news station, the news outlet where she wants to do journalism and really make an impact, I share with her, well, if I'm the hiring manager and I look at her resume and I see she has a following of 100,000 people as a news organization, that's very important to me, because now I know every time she does a news story, she's going to post it and it's going to get potentially 100,000 people to look at it. That's very important for a news organization versus another applicant that may only have 1,000 followers. That's not very valuable to me as a news organizer. And me, as a content creator, as a real estate coach, as an investor and a syndicator, it's very important for me to bring people on who can share my message to hundreds of thousands of people, to be able to get them, speaking with me so that I can help them. Right. So even for me, it's important to bring on folks who have a huge following. So that's the second nugget there, of make sure you're growing your following to be as big as it possibly can.
So
Your editor can edit out my sneeze now and me blowing my nose.
that's a perfect opportunity for me to squeeze in here, because as you were saying all of this, it brought me back to my first book, which I really wrote out of frustration because growing up, it was always, you have to go to college, you have to get a good job or become a cop, a fireman, get a job with a pension. So, you're in some way, shape or form going to have that comfort, that security. But really, times have changed so much where almost facing the same thing with AI. Everyone wants to resist it. Like, no, you can't do that. Kind of like when I was growing up. No, you can't go work for yourself. That's not a good idea. That's not safe. And maybe they were right, but nothing was ever really accomplished great in life by being safe.
Yeah.
And you brought up I want to hit on reperception. One of our clients recently wrote a book, the new Meta Leadership, by Andrea Iorio, the new principles leaders need in today's life. And if we can't, I butchered his subtitle because I didn't plan on talking about it. But when you brought up contract law, it immediately made me think of like, Tony, wait, along the lines of all of your energy should be focused on litigating, right? The things the AI can't do. Don't focus so much on learning how to write the most ironclad contract on earth. That's going to be removed from your plate.
Yeah.
But if you're saying, hey, that's the only thing I like, and I don't want to speak in public, and I can't be persuasive, and I can't argue a case, maybe
Yeah.
you should rethink what you're going to school for.
Yeah, I don't want folks to be afraid of AI. That's not the message I want to send. I want them to embrace AI because it's here and it's here to stay. So if you're going into, contract law, for an example, you're absolutely right. I'm glad you came back to this. Use AI to do your marketing, to do your bookkeeping, to do all those repetitive type tasks that AI is great for, right? Know it, love it, embrace it, use it for those types of things. And then focus your time on the more high dollar stuff like litigation, things like that, where you are tied to the customer, because AI cannot speak to your customer. You are the one. So you got to be doing those most important customer interfacing type things.
If you're going to be a real estate investor, right, I'm sure that it already exists. You probably know better than I. And if it doesn't, or it's going to get better, there's God knows how much AI coming to evaluate deals for you, where you no longer need to sit there and run your own cash flow analysis or your own flip calculator. But what the AI can't do is it can't go negotiate with the seller. It can't go negotiate with the bank for you. It can't explain who you are as a person, your business skills, your everything that you bring to the table. It can just do
Yeah.
that other mundane stuff for you.
Yeah, no, you're absolutely right. And so the sooner we realize these things, I think the better off we are. I shared with you, I retired at 44, and I'm really proud of that fact because I worked hard and was able to achieve it. But man, if I knew those things sooner in life, I would have been able to retire that much sooner, right? I but I'm a little slow. I'm a little slow on the uptake. Takes me a little bit.
Give yourself
Uh
more credit, Tony. I can't tell you many people would be thrilled to retire at 44 and learn slow. Okay.
yeah, so it's change is sometimes a difficult thing, and taking action is sometimes a difficult thing, but this is why I love what you do, Matt, right? And this is why I do what I do, is because we're here to serve people. We don't do these podcasts because we're making money. My podcast doesn't make me money. Yours doesn't make you money. We're here to serve people. We're here to help people kind of think outside the gudge of their daily life. And hopefully there's a nugget in here somewhere. I don't know where it's going to be for any particular person, right? Everybody is in their own world. But hopefully there's some word or phrase or thought experiment that we go through that will help somebody. And that's what we're here for. You are here to serve. I'm here to serve. And hopefully there's some goodness in this.
If there's 10 people listening to this podcast and one person walks away with slightly less apprehension of AI, and one person walks away with less fear of getting involved in real estate, I'm sure that all 10 people may walk away with something different. But if they walk away with anything, we've done our job.
There you go. Yep, you're right.
So I've got to ask, since you brought it up, you retired at 44, and I'm assuming that's predominantly from your real estate endeavors, correct?
Correct. Yep.
When did you first get into real estate, and why and how?
Okay, so I got into real estate. I was a late bloomer in real estate. I probably got into real estate about 30 years old. I'd have to go back and look, but somewhere around there in real early 30s, 30, 31. The reason I got into real estate is I'll take you a little further back than that. My parents were immigrants from Europe. So I'm the product of two immigrant parents who came from a poor country, who they came here, they saw so much opportunity, and they handed down the mantra that they knew best of go to school, you'll get a good education, you'll get a good job, you'll be taken care of forever. And so me as a kid, I mean, I didn't know any better, right? I mean, I thought that was okay, sage advice. I'll go get an education and I'll be good. And so that's what I did. I went to school. I went to college, got a good education, got a degree in mechanical engineering, right? Mechanical engineering. And then I went to work, and then I got my MBA degree, right? And I thought, hey, great, I'm set. Like my parents said, I'd be set for life. I'd always have a job. I got a mechanical engineering degree and I got my MBA. Life is good. And then I got laid off, right?
Need to
That
laugh.
wasn't part of that wasn't part of the equation. That wasn't part of the mantra they handed down. And so I said, wait a minute here, something's amiss. And so I really had to have that moment with myself to think through how I wanted to proceed in life. Because for me, freedom was a huge aspect of like my value system. I wanted freedom to do what I want to do when I want to do it because I wanted to do it. And that's a lot of what I help people with and talk about today is, just freedom. And um, so I wasn't financially independent at that time when I was laid off. So I had to go find another job. And but shortly thereafter, I refinanced my condo, and with some savings that I had, I bought my first multifamily. It was a 4 unit, a quad, what we call a quad, a 4 unit apartment building. And so I started small. I didn't start with some huge complex or anything. I started small. And I think that's a valuable to your listeners, folks looking to get started. You don't have to start in a massive way. Start small, buy a duplex, buy a quad, heck, even buy a condo. Sometimes those numbers work. The math always needs to work, obviously. But I started buying small multifamilies, a quad. I bought a duplex. I bought a triplex, a 3 unit building, and then I ended up buying bigger and bigger buildings after that. But since my early 30s, I continued that because I realized real estate was a way for me to basically make money while I slept or while I was at work working my W-2 job as an engineer. And so I continued to do that. And I got to the point where I was 44 years old. I was kind of disappointed with my path in the corporate environment. And I said, I'm at the point where my rental income exceeds my expenses. So I was in a cash positive situation. And I said, I can leave my 6-figure corporate job and not really feel the pain of losing that corporate income. And oh, by the way, I would be gaining a shit ton of freedom because now I have more time on my hands to do what I want when I want because I want. So that's what I did. That's how I got to 44, retired from the corporate job, and now just kind of pontificate and do whatever I want to do, which has been a incredibly fun ride and very fulfilling for me personally as a human being. So yeah.
So you hit on a couple things I just want to highlight for the listeners, and see where it takes us. But I love what you said about starting small, because too many times we hear these stories of I won't mention any names, but these mega tycoons, it's like, oh, they started with a $4 million investment. And I mean, most people, you're not going to get that. I like to equate it to baseball. Tony Gwynn's probably one of the best hitters to ever play the game. And he wasn't swinging for home runs. He was hitting singles and doubles. If the home runs came, they came. But
Right.
best batting average probably will ever. Now, when he batted at 333 was exceptional. Now, if we get a 240 hitter, people are like, oh my God, he's great, because everyone's trying to hit the home runs. And
Yeah.
when you hit the home runs, you miss more than you hit.
Yeah. Yeah. It's not about like, we do syndications now. Years later, I mean, we're looking in October here. We're looking to close on a 338 unit property. And it's a, $50 million deal. And I mean, you don't get to that without doing your homework, without starting somewhere. You won't get to that. You will eventually, you will, if that's where you want to go, you will get to that. But it can start as a active investor, right? You and I, we speak about active and passive investors. As an active investor, if you want to participate, if you want to learn the business more, you can easily start with a condo or a duplex and build yourself up from there. As you go along, you can then translate to more the passive side. I do some passive investing myself as a limited partner in some syndications because I just don't have the bandwidth to do. I shouldn't say the bandwidth. I don't want to spend all my time looking at real estate deals. So I divert some of my income to passive investing through limited partnerships with syndicators to do some investment because that's I'm looking for free time. I'm looking for, you and I would just talk. I spent the last month of September in Europe, right? I had a chance to travel through several countries, several cities, and it was a lot of fun to be able to do that for an entire month. I can't do that if I'm always looking at real estate deals. It just, so if you are busy, I get it. I get people are busy out there. If you're not wanting to be an active investor, there's always that option to be a passive investor as a limited partner in a syndication and derive some of the same benefits of, being just investing in real estate. So
Yeah, and it's important to note too what's a single or a double for you when you're starting out. With the home run, as you move on in your real estate career, what was a home run 5 years ago might be your new single or double. When
yeah,
you have the ability to now put together a $300 million or 300 unit deal, but you could actually be looking at bigger deals. That may be your double. And there's nothing wrong
yeah,
with that. Everything's got to make sense at the time. And I don't want to say fit
yeah,
within your comfort level. I mean, you do need to not put yourself completely at risk,
yeah.
but you also don't want to be too comfortable where it doesn't make any money.
And real estate is so wild because right, none of this stuff, you and I know, none of this stuff is taught in school, uh either at the high school level or at the college level, and it really should, because real estate is such a wild investment class. Because and so I'll share a couple of different stories, right? So I had somebody who called me out of the blue. They knew I did real estate coaching, and they said, hey Tony, I know you do, real estate, and but that's not for me. I don't want to be a landlord. I don't want to answer calls. I'm not into real estate investing, blah blah. I'm like, oh, okay, that's okay. I'm not here to judge. It's not for everybody. I get that. So I said, well, okay, why are you calling? And so he said, well, I know you're a pretty smart guy. You do this stuff. You retired at 44, blah, blah. So I want to retire too one day, but I have nothing in my retirement account, or very little in my retirement account. And I'm like, oh, okay. So how do I fix that, Tony? And so I shared with him, I said, oh, okay, I get it. You don't want to be a landlord, or, you don't want to do real estate. I can appreciate that. But humor me, go on this journey with me for a little bit. I said, okay, so you're 50 years old. You want to retire at 60, 62, whatever it is. I'm like, what do you and your wife like to do? He's like, gee, Tony, we like to golf. I'm like, okay, that's great. What else? Well, my wife likes to go to the beach. She likes the sun. She likes, going to the beach, enjoying some time there, blah, blah, blah. So I said, okay, well, humor me for a second. I know you don't want to do real estate, but humor me for a second. Like, what if you did like an Airbnb in like Myrtle Beach area, right? The Airbnb could be managed by somebody else. There's plenty of companies out there that manage Airbnbs for you, so you don't have to do it yourself. But if you have an Airbnb, you'd not only be able to derive some amount of cash flow that would help pay for this asset, but in retirement, you'd be able to use that asset, live in that asset for a month or two, whatever you want, to be able to go golfing, go to the beach, essentially have the quality of life you want in retirement. He says, wow, that sounds pretty good because yeah, I want to golf in retirement and my wife wants to go to the beach. Yeah, but he said, but Tony, we also like going up north. We like snowmobiling, we like hunting, blah blah. He's like, could I buy a place in Maine? And I'm like, yeah, you could buy an Airbnb in Maine and do the same thing, rent it out to snowmobilers, rent it out to hunters, and when they're not using it, you can use it yourself in retirement to go hunting and to go snowmobiling. And again, it's about the quality of life in retirement. And so he was getting away more and more from the I don't have enough cash in the bank to retire to really understanding it's all about quality of life in his retirement. And so at the end of this 60-minute conversation, no word of a lie, he was up to like 5 Airbnbs across the East Coast because he's on the East Coast. I'm on the East Coast, so I know it well. And so he was up to like 5 Airbnbs in different locations where him and his wife in retirement could travel to and have a unique quality of life, a different quality of life. So it wasn't all about the money with real estate and the cash flow of it. We want our assets to pay for themselves in cash flow. Um, but it's also about when you get to retirement, being able to have a certain quality of life. And once I started sharing the message that way, he really started to, take hold of it and really understand why I do what I do and how he can now, facing into this, not having much in his retirement, he's really has a much more positive mindset on retirement than he's ever had before. So that's just one story. I wanted to share another story, but I've since forgotten it. So I'm sorry.
But while you're thinking about that, I mean, I want to point out two things. The first is not all real estate is different, right? So
Yeah.
you just gave a great example of what someone thought real estate would entail, and
Yeah.
then completely realized, well, I don't have to have, steady monthly tenants and houses I can never go stay in. There's a whole different angle to it. Real estate, in my opinion, is truly the only investment class on earth that you have full control over.
Yeah.
Yes, market conditions come into play a little bit, but you're managing it, right? You're in the stock market. If someone mismanages a company and it goes out of business, you've lost your whole
Yeah.
investment. They
So
create.
yeah, so that's true as far as like active investing. You gotta be in front of it, make sure the numbers work. You gotta have a property manager that you trust and you can interact with, unless you're doing that piece yourself. But as far as if you go into investing in syndications and the more passive approach to real estate investing, um, that is more, as you know, more hands off, and you do have to relinquish a lot of
Some control.
responsibility to somebody else. And so, in that relinquishing of responsibility, you really have to know who you're working with and make sure they have a good track record. So yeah, that's the only for your audience, the distinction I would make there with active versus passive.
So the second part I was going to mention there, which even in that scenario gives me a lot more comfort in that versus maybe a mutual fund or a
Yeah.
publicly traded company, is that there's only two things that I know of on this earth that they are not making more of. One is land and the other is time.
Yeah. Yep.
Right. So you've got to think like there's only so much of it. They can create a new investment tomorrow. Like all of the other things can be manipulated and artificially created. Again, not that, maybe you can't real estate to some degree, but you're not creating land.
Yeah, and where they are creating land, like in the Boston Seaport, and years ago they did it in New York City. They dredged and they
Oh, the
created things.
terraforming and
Yeah, that's uber expensive. And so when you look at the existing land, you're absolutely right. That existing land, there's a fixed amount of it, and it's just getting more expensive. So yeah.
I always like to say, look at the wealthiest people in this country or those who own the most land.
Mm.
It rotates a little bit, but the top five families are generally always the top five families for land percentage of land ownership in this country. And there's a reason.
Yeah, and it's not just for, for folks who are interested in rentals, for residential living, right? We've looked at land from an agriculture standpoint, being able to use it for agriculture production, right? Food. We've also looked at oil and gas companies who buy land to be able to punch a hole in the ground and get oil and gas out of it, right? We buy the land for the resourcefulness of that land. So it's not, for some folks who are just like, hey, I don't want to do residential investing. That's okay. Maybe your slant is about agriculture. Maybe your slant is about oil and gas. And that's a different avenue. So
Yeah.
it's all good. There's no judgment. It's just again, it's not taught in school, and it takes guys like you and me just to get on a podcast and pontificate about these different things, and hopefully we help some people in some small way think different.
Absolutely. Because you know what? At the end of the day, kind of like everyone's going to walk away with something different from this conversation. Everyone's going to have a different strategy. They might like real
Yeah.
estate for one reason versus another. Trends are constantly changing, right? So I
Yeah.
personally feel, especially living in the New York metro area, so many younger people are moving away from this mega mansion kind of, and it's going a lot more minimalistic because they realize I want to enjoy my life. I don't
Yeah.
need a 6,000 square foot house with $38,000 in taxes every year when I don't even want to be here for more than 3 months out of the year. So tiny homes, container homes,
Yep.
mobile home, like transient living, it's becoming much more popular than it ever was.
You're so right, Matt. Amazing. And we didn't, for the audience, we didn't plan this conversation. We're just kind of freestyling here in
Yeah,
this
we fully
conversation.
disclosed anything that was talked about off camera. The rest of this is just coming up organically.
Yeah, it really is. And so, you're talking about where society and our culture is right now because of a lot of different reasons. And actually, it's called, we call it renter nation. We're trending more towards a renter nation. And I know it well. And I was smiling as you were going through that conversation because, I'm actually going to be speaking about it at the Spartan Summit. I think Wednesday, Thursday this week. So by the time this airs, that Spartan Summit's probably over, but check out Spartan Summit for the folks who might be interested. But anyway, I bring that up because renter nation is a real thing. There's a lot of factors that are driving us in that direction. And you look at some of these new people still want to have the white picket fence. They want to have the backyard to play with the dog or the kids. They want that. They want that dream, but they don't want to own the responsibility of taking care of a house. And that's okay. Just this is where we need to understand where we are, not where we want it to be or we expect it to be, but you have to look at where it actually is and make decisions based on that, not on where you think it should be or where you want it to be, but where it actually is. And so, you look at where society's at, with it just real, and there's a lot of different dynamics going on here pushing us towards a renter nation. I'm just going to mention one in particular for the sake of time and not to bore your audience. But we all know, look at Amazon, next day delivery. People are conditioned to immediate satisfaction with Amazon next day delivery. Okay. They don't even want to go to the store. Walmart in every corner, they don't even want to go to the store. They order it from Amazon. I see it with my tenants. I see it. not only that, you have Instacart. People don't even want to go to a store for their groceries, right? They want them, picked and delivered for them. So, okay, there's Instacart. There's Uber Eats, DoorDash, Grubhub. They don't even want to cook the food anymore that is brought to their door. Right? They don't even want to do that. So we have a culture right now that's been created that will continue to be fostered through the Amazon, through the Grubhub and Uber Eats and all that sort of stuff. Do you think this culture wants to spend a weekend cleaning the gutters, mowing the lawn, painting trim on their house, seal coating the driveway? They don't. And I'm not saying that's a good thing or a bad thing. It just is. That is where we are. People still want the white picket fence in the backyard. They want that. They adore that. But they're not willing to put the work into maintaining and keeping that property. They're also more nomadic because we have this thing going on where there's less loyalty with the company you work for, both on both sides. The employee less loyal to the employer, and the employer is also less loyal to the employee, right? So there's this more nomadic society today than ever before. So a lot of reasons trending towards that renter nation that you brought up. So I could talk about it for hours. It's a fun conversation. So anyway.
It is. And again, hopefully it's just sparking thoughts for somebody else who's like, oh my goodness, I didn't even realize it, but that's me. Because I mean,
Yeah.
time. Let's go back to what we can't make more of, time.
Yeah.
So what would I rather do? Would I rather spend those 2 hours on a Sunday pulling my gutters, mowing the lawn? Or would I rather spend it with my kids? Would I rather spend it at the beach and let my landlord worry about it? There's no right or wrong answer either way.
You're right. Yeah, exactly. And this is where I have the luxury of, I don't work for a corporation. I don't work for anybody per se. I work for my clients. I work for the people that I coach. But outside of that, I have freedom of thought to be able to just sit on my back deck and just think about this stuff and pontificate and say, which way is this going? Up or down, or right or left, or less renters, more renters? And I don't really have a dog in the fight. I don't really care which way it's going. I'm out there seeking truth, and then taking what I perceive as truth and where I research and see things, then I take my action. And I say, oh, okay, and obviously if I'm an investor, any investor out there, you got to run the numbers. You got to do your research. I'm not saying to go off and buy a duplex today or go invest in a syndication today. That's not what I'm saying. You got to do your research. Make sure the numbers work. Heck, I was just chatting with real estate investor. He's also a syndicator. They have a piece of land where they already have 180 units on this parcel, and they have approval to build like another 200 apartment units. But he was talking, and he's like, Tony, I ran the numbers, and it just, at these interest rates, it doesn't make sense for us to build. And so it all starts really there. You got to run the numbers. If you want to be a real estate investor, you got to figure that out. You got to figure out migration patterns. You got to figure out the management of things, how you want to manage and where you want to be in that equation. Like you had said, there's a lot of different reasons to invest in real estate, and it's not just all about the cash flow, right? There's a cash flow component that we always want to achieve, like to achieve, but then there's also an equity component that if you're looking for more of a generational wealth, right? Maybe if you're getting $100 a month in cash flow, maybe that's good enough because that property is zoned or it's in an area where 10 years from now, you're going to have a generational wealth and appreciation in that property of $500,000, right? Outside of that, you may be killing it in your day-to-day business, making $1 million of income, and you're like, I'm paying way too much taxes. I need to get my tax base down. So you may look at being a limited partner or some sort of partner in a syndication where you get greater depreciation on your tax return, greater depreciation to bring your tax base down from $1 million to something less. So you're now paying less taxes through your real estate investments. So, and I'm not a CPA. Every situation is different. You really got to pass all those by your CPA before you even pull the trigger on anything to make sure you can qualify for those deductions. But what I'm getting at here is real estate. To your point, there's a lot of different reasons to invest in real estate, whether it's cash flow, it's appreciation for generational wealth or for retirement, or depreciation of that hard asset so that you can achieve a lower tax base and pay less taxes.
I should have realized we could probably talk all day, so I'm going to try to be a little conscious of time. But there are a couple of things I do want to just, maybe we'll tie up with it unless it takes us down another rabbit hole. But we spoke about there not being any more time getting created. Timing is another component of time that I think people need to realize. So the situation you mentioned, that investor who has 180 units, here's the thing, they own the land already, right?
There you go.
So they don't need to build the other 200 units today when interest rates are at 9%. They can do it in 5 years from now.
You got it.
They can pass it along to their heirs, and it could be done in 2 generations from now. No one can take the land from them. So timing is key. Don't get greedy. And what you said earlier, I think, is gold, and everyone needs to realize this if you haven't already. No one really cares what you want or what you think. And I mean that in the nicest possible way. The world is the world. So I could want single family residential to be the best performing asset class. And that's where because that's what I own. That's all my dogs in the fight. That doesn't mean the market's going to agree with me. I have to accept the fact that the market doesn't agree with me, and I can ride it out, or I can figure out how to adapt.
There you go. I mean, I do coaching. And so I have clients who want to buy, and that's great. I want them to buy. However, the numbers are, it's very difficult to make the numbers work today because of the interest rate scenario, depending on how much money you're putting down and whatnot. So they are realizing that, and they're realizing maybe it's better for me to shift to syndication, because with syndicators, they already have a team in place. Long story short, they're more efficient than a individual owner. They can amortize those costs over a bigger base, and so they're more efficient, they're more profitable. And so these clients are looking at it, and just like you're saying, they're saying, yeah, I want to buy all day long, but if that opportunity isn't there, I need to shift my focus and I need to go do something else. And so now they're looking at syndication, which may or may not be the right thing for them at the end of the day. There's other issues to consider there. So yeah, we're always doing this shift and reposition, and we're buying real heavy or we're holding off. Yeah, it's always this is a very interesting time. I've been in real estate, for almost 20 years now. And it's a really interesting time right now. And
sometimes you've got that piece of your portfolio that you're like, I'll never sell this. And someone comes along and says, I really want this, I'll give you X. And then you say, I don't like it so much anymore, because that sounds incredible.
That's right. That's right. And sometimes you just hunker down and say, hey, I'm going to place my cash in treasuries and sit on it at 5% until, something breaks, something happens. And, and there's quite a few real estate investors who have a certain amount of cash just sitting in treasuries right now. And that's okay.
Cash is still king, right? Because you never know when the right deal comes along. If you have all your cash spent and now you're looking to put together financing, this is something I cover in my book for every asset class. Cash is always going to be king. When you're coming with financing and additional layers and terms and restrictions, that seller's looking at you like, yeah, okay, so you're offering me $1 million with all of these restrictions. That guy's offering me $950 and he's going to close in 30 days and I don't got to do anything. I'll take the $950.
Yeah, you're right. You're right. Yeah, there's a lot of different scenarios, and again, it goes back, we're not taught this in school. So we need to help each other. I, folks that have done it, need to help others. And on the other side of the equation, it's those folks who are trying to or wanting to do it. If you're out there, reach out to Matt, reach out to me. You know, we're pretty, as you can see, we're just yakking here, we're just freestyling. We're pretty approachable guys. We might not be the best. Well, Matt's better looking than I am, but we may not be the best looking guys. But between the two of us, we do have quite a bit of experience to help people. So if you're on that other side of the equation, want to dip your foot in this real estate pond, it's not about pushing you into that pond. We too may say now's not the right time, but I've shared with a lot of folks, when you're not physically investing, buying and selling, that's a great time to be learning, right? Use that time for your education. Use that time to learn the market, to learn the tools, to build your network. Okay. Use that time. Don't lose that time. If the next year is kind of like going to be kind of a tough year to buy real estate, don't buy real estate, but don't do nothing. Go build your network. Go, create relationships with mortgage brokers, or with banks, or with property managers, or just go learn, go read books, go listen to podcasts. There's so much more to do. So yeah, we're not here to we're just here to help people. That's our
I
service.
swear no one knows this. Tony doesn't even know this, but I have an entire chapter of my new book. It's called The Dream Team, and it's all about the people you want in your world, and the time to go find them, to go find your great real estate attorneys, your great accountants, your great bankers, is not when you have found a deal. It is long before you've ever even started evaluating property, because
Right.
it's also not the time to start learning, like, oh shoot, there's this great opportunity, let me teach myself how to do this. No, that's where the most money is lost in anything, not just real estate.
Yeah, you're absolutely right. And it reminds me of, we never buy or sell with emotion. As a real estate investor, it was so funny. I had a property, single family residence down in Florida, and I'm the type of guy, I always stand on the edge of the coin. If this happens, I'm going to profit. If this happens, I'm going to profit. I always want to stand on the edge of the coin and make sure I'm always in a winning situation. So I had a single family property down in Florida, and I said, you know what? I'm going to list it for rent, but I'm also going to list it for sale. And I want to see what happens. And so it was real interesting. And again, it kind of trends towards more. I use this as a case study in my presentation coming up about Renter Nation. I think I had like one person come by who wanted to purchase the property, and I probably had like 20 people who wanted to rent it. Right. So, and that's just me. That's just one property, one case. But stand on the edge of that coin. And I'm doing the same thing and that was a non-emotional based thing. I was just looking at it and I was saying, hey, if it sells, I'm perfectly fine with it selling. I'll go 1031 that money into something else, which is a whole nother conversation we can have another day. Right. So I can profit tax free and go do something else with that money, or I can rent it and just cash flow each and every month, which I'm okay with. Hey, more cash, that's okay. And we're doing the same thing with another property. We have another property that we've posted online for sale. And if it sells, it sells. And we 1031 that into another property. Or if we continue to hold it, if it doesn't sell, we'll just continue to cash flow. We don't care. It's non-emotional for us. So, and that's where we try to get people, is in that non-emotional state, just really looking to do the best things, best financial decisions for themselves and for their families.
It sounds like your next book should be titled Renter Nation. And I can give you a whole lot of case studies as well. I mean, of the 60 something units we have of residential, Tony, they're never vacant. If they
Right.
are within, you post one vacancy, for rent, and the applications just flood in.
Yeah,
There is no shortage of people looking to rent.
you're absolutely right. We see it all day long. I mean, right? One of the kind of common things that happens when I'm working with a client for coaching is they're like, oh, well, my aunt or my father told me it was bad to be a landlord. Renters suck. They destroy your property. You're going to have eviction. And they come with all these bad stories. And I say, well, does your aunt own any rentals? No, she doesn't. Well, what about your dad? Does he own any rentals? Has he ever done? No. And so I'm like, I'm left with having to break down these myths, these bad misconceptions from people who have never owned rentals, right? Like it's like, okay, like now let's start having conversations with people who actually do own rentals. And I will share with you in a matter of, so like in 20 years, I've had two evictions, two, right? That's it, right? And they went relatively well. Now that's not everybody's, story. I get it, but that's how we do business. We have a model that works. And so yeah, yeah, if you're looking to get into the business, please do yourself a favor, create a network, speak with people who are actually doing what you want to do. Don't talk to people who, have no experience with it.
Tony, you just gave me the perfect place to wrap this because that's our audience's call to action. I even covered this in my first book, and we spoke about it earlier with the going to college and getting a good job, right? Things change.
Yeah.
So if you want to be an astronaut, surround yourself with people who are in the Air Force or people who are in NASA. And don't surround yourself with the 75-year-old janitor. Not that there's anything wrong with the 75-year-old janitor, but he ain't going to help you get to the moon. If you want to be in real estate investing, don't ask the school teacher who's rented her whole life and never owned a piece of property. Talk to a guy who's got, retired from being a landlord or from investing in real estate. That's where the most valuable education comes, because back to what you said, they don't offer it in school. And if they do, it's theory. It's nothing like what you're going to learn. Talking to someone who has dealt with even one eviction is better than the person who's just heard a horror story from their brother, sister's cousin.
Right.
Talk to the people who have dealt with upkeep issues, foundation issues, whatever, structuring a deal, finance. There are so many moving pieces that if your circle doesn't include people doing it, you're never going to learn it.
Very valid. That's a very good point. Very good takeaway from this conversation.
Thank you, Tony. I can't tell you how much of a pleasure it was to have you on. We're definitely going to get you back on because I know we definitely could have probably went for another hour, and we're already well over my normal 30 minutes, but I just couldn't stop it. So for everyone listening, Tony's information will be posted with the show. If you're interested in real estate coaching or syndication, or actually two things I don't really focus on as much, by all means, please reach out to Tony. If you're in the New York, Pennsylvania, Connecticut area, and you're looking for any type of advice on real estate transactions or becoming a landlord property manager, I'm more than willing to have a conversation and give you my piece on that in this area. And I specifically say that area because, again, everything changes market to market. But we appreciate you listening. Hopefully you've learned something. I really do advise, reach out to Tony, reach out to myself, and we'll catch you all in the next episode of the Getting Real podcast. Tony, once again, thank you so much.
Thanks for having me on, Matt. I appreciate you. Thanks.
My pleasure. Thank you.